heard a story one time that somebody told in one of our group meetings that there was a guy down in Louisiana, and after Katrina, he couldn't get a loan, and so he wanted to buy, what was it, like a wood cutting machine or something? To
Let's
it
go with
was
that. That sounds right. I know which story you're talking about. Yeah.
yeah, and
He couldn't
he
get a loan for the bank to do it because what
right.
collateral did he have? You know.
Yeah, and so he had cash in his policy, and he went and started a business, whether it was helping clean up houses or using it to cut up trees or whatever it was. But he took the collateral in his policy and used it to start that business, and turned
Mhm.
that whatever that loan was. Let's just say it's $50,000. I don't know what it was, but just for round numbers, and turned it into several hundred thousands of dollars that he made off of that. Now, and that's the other thing. You won't always, if there's something like that, you might not always have access to funds, regardless of what your credit looks like. Banks just might not be loaning money at the moment because of a natural disaster or things going on, in the world or the economy or things like that. They might just tighten up lending restrictions for a while. So having access to that collateral when you need it on a moment's notice can be very important and beneficial to your business and even to you as an individual.
Yeah, having access to all lines of credit, regardless of source, in advance of emergency or opportunity is always good. Because now the nice thing about life insurance is that when banks say no, your life insurance automatically says yes because you are the owner of the policy. You have the fundamental right by contract to access your cash values at any time, as long as you have cash values in there. Now, you can only get up to, like, let's say 95% at the very most. What every insurance company is going to be a little different because you actually have to be able to post the interest 1 year in advance. That's what they call interest in arrears. But even if you only use it for 6 months, they'll prorate it back. That's not a problem there. But
Yeah,
the idea is that,
I always like to say 90 to 95%, that
yeah,
way there's a cushion there. 95% would probably be the max I would take, but anything, 90% or lower is more than safe. So,
yeah, absolutely. So if you have the available funds, so like that guy, the story was the guy was in Louisiana. This is New Orleans, however
Nolans,
you say it, New Orleans.
Nolans.
And the guy saw an opportunity, but the bank could not grant the loan because banks do not see opportunity. Banks often just see risk. And one of my favorite movies is Catch Me If You Can. I actually used that as loss prevention training when I was a bank manager.